Islamic social finance is known as a sector that included all traditional Islamic institutions, products, services involved for managed allocation and distribution of funds collected on the basis of zakat, wakaf, sadaqah, qard, kafalah, and also contemporary Islamic microfinance institutions. Islamic financial institution and corporation initiate and introduce the initiative which consists of form of humanitarian and social development program for the society. It is known as Islamic social financing. It's a corporate social responsibility (CSR) in Malaysia. Islamic social financing performed through variety way and form that are predetermined by Sharia law. The objective of Islamic social finance is to meet the needs of the poor that show rising level of poverty, and is to develop their well-being, become more better by offering and supplying funds for consumption needs, with the aim to focus on to reduce the group of individuals from the poverty.
The first institution applying Islamic concept is the Lembaga Tabung Haji, which normally referred to as Perbadanan Wan Simpanan Bakar-Bakar Haji. It was established in 1969 with the main goal to encourage Muslims to do their saving on installment basis for the purpose of their pilgrimage fund. However, this institution cannot be considered as a bank but more into collecting deposit in helping Muslim community to perform pilgrimage, also as participate in investment and economic activities. Thus, on 30 July 1981, the government has appointed a National Steering Committee of Islamic Bank to construct an Islamic bank in our country. After 1 year, the committee has proposed a basic framework of supervising and licensing of Islamic banking system in Malaysia. On 7 April 1983, the government has passed the Islamic Bank Act 1983 and Bank Islam Malaysia was established on that day.
Compatibility are often defined as degree to which an innovation is perceived as according to the past experiences, needs of potential adopters and existing values. The types of product provided by Islamic banking will determine and analyze whether it is suitable to Muslims' community needs, belief and social system. It is important to Islamic banking to provide service such as the sharings of profits and loss, which can contribute to the better economy. Compatibility has an important impact on consumers' adoptions of Islamic banking, where the more products and services are compatible with a consumer's beliefs, the more consumers will adapt its usage. Consumer satisfaction is known as customer ratings of the result that they receive from doing business. This is an important part to understand what drives customer satisfactions toward a bank, where it is actually can make consumers to repurchase a product that will lead to the desired outcome of brand loyalty. In other words, consumers have capability to choose the bank that will give the best satisfactions based on products and services offered by an Islamic bank.
Next factor is disperception. Perceived risk can be defined as the level of natural uncertainty where the consumer's experience in his effort to use a particular product or service. A user of Islamic banking may receive their benefits through trade and investment as form of return only if they assume some of their risks are risk-sharing according to the Islamic principle. Meanwhile, in conventional banking, users' interest on deposit, but for Islamic banking, applies profit and loss sharing as known as risk sharing. Last factor is consumer knowledge toward Islamic banking. Consumers will use several steps before they decide to purchase any product or services, which is knowledge, persuasion, decision and confirmation. After they adapted with all of these steps, the consumer have ability to make decision whether to accept or reject a product. The degree of how much a consumer will look into a product is influenced by the consumer's past knowledge about a product. There are 4 banks that fully offer Islamic banking scheme, namely Bank Islam, Bank Muamalat, Bank Rakyat and MBSD Bank Berhad. Bank Islamic Malaysia Berhad was the first Islamic bank established in Malaysia. It was named as BIMB, in which it registered office in Malaysia and began their business operation on July 1983, with a branch in Kuala Lumpur. The main focus operation of BIMB based on Islamic principle is to implement the non-usury banking and finance scheme. Bank Muamalat Malaysia Berhad was established as the second Islamic bank in Malaysia on 1st October 1999. This Islamic banking institution was formed by government's effort to strengthen the Islamic banking sector. Indirectly, they aim to increase the demand of public on Islamic banking services. Bank Rakyat was third Islamic banking which established on 5 May 1993, and it was started with 4 branches. The Sharia contract used by Bank Rakyat is Al-Mudarabah, Al-Wadi'ah, Al-Rahnu, Bai Al-Ina and Al-Murabaha. After that, Bank Rakyat was have 40 branches at the end of 1995 which fully operate in Islamic banking. MBSB Bank Berhad was 4th Islamic banking which established on 6 November 2017. MBSB Bank Berhad, formerly referred to as Asian Finance Bank Berhad, has been granted a license by Bank Negara Malaysia to undertake Islamic banking business. BNM was regulated and supervised the MBSB Bank under the Islamic Financial Service Act 2013. On 2 April 2018, AFB undertook a rebranding exercise and changed its name to MBSB Bank Berhad.
Islamic social finance that currently being used in the Malaysia have a 3 category, which is Islamic traditional instrument based on generosity, the second is cooperative based on foundation, and the last one is modern forms of Islamic financial services. Under Islamic traditional instrument based on the generosity such as zakat, sadaqah and wakaf, Muslims are required to pay zakat on annual basis. Sadaqah is a charitable amount that can paid regularly in the form of donation. Wakaf is referred to asset of investment that be given by the owners based on trust with the process.
In addition, the instrument Islamic social finance under cooperative based on foundation is Qard al-Hasan. Qard is a commercial contract in which a lender lend a money to a borrower and the latter is obligated to repay the lender the same identical amount of the borrowed money. It is free of interest and recognized by the Sharia. Meanwhile, kafalah is a contract of guarantee or a taking of responsibility for a liability provided by the guarantor of or kafil. The last instrument of Islamic social finance under Islamic financial services is sukuk. Sukuk refer to an Islamic bond is one is which the investor receive a portion of an asset with transparent cash flow and risk. Socially responsible investment (SRI) sukuk or green sukuk should be considered under Islamic social finance. The next is Islamic microfinance. In this microfinance include all microfinance products such as micro-saving, microcredit, micro-insurance and micro-transfer. Lastly, instrument of Islamic social finance under Islamic financial services is takaful. Takaful is Sharia-compliant insurance in which a group of individuals freely agree to protect each other from any defined loss that may occur.
Zakat is referred to a portion of their property is used for religious and charitable purpose, and this payment is made of the certain portions. Zakat is an important aspect of the Islamic social economic system. Zakat collection is institutions in Malaysia despite the fact that it's state of concerns. The objective in zakat is the provocations of one works. In Malaysia, there have 2 types of zakat, which is zakat on wealth, which is a zakat al-mal, and also zakat of individual, zakat fitrah. Zakat al-mal is about zakat on wealth or zakat harta. When Muslim reach a certain financial requirement, they are required to pay a zakat harta every year. Under zakat harta, the types of wealth which include the zakat on gold and silver, zakat on EPF, zakat of farming, zakat of business, and also zakat of saving and on earnings. The second type is a zakat fitrah. Zakat fitrah is zakat on individual. All Muslims should pay every year regardless of gender, age or rank. This a type of zakat is performed in Ramadan because Muslims are required to pay it before it expires. This table shows that the zakat fitrah rates in Malaysia in year 2021 for each state. In Malaysia, Zakat Corporation have 4 different forms of zakat in dealing with the collection and distribution. Firstly, a corporation has been established under zakat enactments such as Jabatan Zakat Negeri Kedah. The Kedah Administration of Islamic Law enactment was fully separate from the enactment. Other than that is Tabung Baitul Mal Sarawak and also Majlis Islamic Sarawak. Second one is a corporation that has been established under an Act of State Administration of Islamic Law enactment with a duty to collect zakat only. That all collection will go to Majlis Agama Islam Negeri, which is they will distribute the zakat to a correct beneficiary. Example for the corporation such as Pusat Kutipan Zakat Pahang, Pusat Zakat Melaka Sdn Bhd. Thirdly, a corporation has been established under the State Administration of Islamic Law enactment such as Lembaga Zakat Selangor, which was founded under the Trustee Corporations. Under Companies Act, Pusat Urus Zakat Pulau Pinang was being a subsidiary for Majlis Agama Pulau Pinang. Lastly, Majlis Agama Islam Negeri is responsible for collection and distribution of zakat through its one unit of Department of Baitul Mal or Zakat Center such as Majlis Agama Islam and Adat Istiadat Melayu Terengganu, Majlis Agama Islam Perlis, Majlis Agama Islam dan Adat Istiadat Melayu Kelantan and etc. There are 8 asnaf categories that are eligible to receive zakat in Malaysia, which is Mu'alaf, Faqih, Miskin, Gahirimin, Amil, Ibnu Sabil, Rikab and also lastly Fi Sabilillah.
Zakat has since to bring improvements in human well-being for the least fortunate, but there are still issues that need to be addressed to ensure that the zakat administration is on the track to eradicate poverty and raise people's living standard nationally and internationally. No matter how well its constructed system is, if it's unable to meet the requirement for the community, particularly for the poor and needy, it is deemed to be ineffective. The first issue is regarding insufficient procedure of zakat distribution. According to Ar-Rahman in Global Journal At-Takafah in 2012, zakat is usually given based on application, but it can also be based on public reports or activities undertaken by the zakat institution itself. The authority established several criteria to ensure that zakat is directed to the proper asnaf or beneficiaries. However, the public has complained that zakat did not reach the intended group due to the lack of public awareness on the side of authority or a lack of information on the part of the community. Besides that, there is also issues regarding potential payers did not perform the duties of paying zakat. The ability of zakat collection centres to identify not only individuals who should pay zakat but also to track down potential zakat payers and should be improved. According to research published by PPZ in year 2010, despite the fact that Selangor has populations of roughly 2 million Muslim, had only around 160,000 payers of zakat. The authority must shift its zakat collection strategy from waiting at counters to proactively organising briefing sessions on the necessity of zakat for students, government employees and private sector workers. This initiative may create awareness among future payers about the need of fulfilling their religious duties. Next, even though zakat can reduce poverty, which can be the sources of motivations to everyone, it is difficult task to do because it has limited capacity to build funds. Giving existing directly to the needy persons through sum of money to help them purchase their essentials is, however, only a temporary solution. The authority would have to provide them with financial aid on a regular basis in the form of zakat. It would lead to a reliance on zakat receipts, which would hinder their ability to improve their standards of living. If the government could adjust the way financial aid distributed, such as funding their children's schooling or sending them to training centres to learn specific skills, the family's future employability would increase.
There are the challenges occurs in Islamic social finance in Malaysia. Firstly, according to the news Sun Daily, Muazzam Muhammad, who is the CEO of Bank Islam Malaysia Berhad, stated that the challenges for traditional Islamic social finance to assist MSME are generally funding imbalance and face credit risk. It is because of commonly have an informal business structure, like a credit track record and weak in financial arrangement that contributed to high credit risk. Secondly, the challenge that can be seen in Islamic social finance in Malaysia is the challenges in reducing the cost of transaction to lower the cost of financing to provide the service on a large scale. It is because of when the MSME only can operate in a small institution and the cost of funds collected on their debtor will turn into higher because does not have economies of scale. Other than that, result of hike in cost even though Islamic microfinancing facility is provided to MSME in Malaysia. Lastly, the challenges of Islamic social finance where it need to concern about their financial stability in order to provide and give fund to the micro-entrepreneur during this pandemic COVID-19. It is because of micro-entrepreneur will obtain and receive the fund from Islamic social finance while consider about the progression of doing their business from time to time. In the situation of COVID-19, micro-enterprise also need to keep open and maintain their businesses because they need to consider about their sales, income, profit, asset and liabilities of the businesses. Currently, the status of conducting businesses has changed to survival mode nowadays. It is necessary to keep up their businesses activity while bear the effect of COVID-19 that will be the one of the biggest challenge for micro-entrepreneur by receiving and seeking funds as backup capital for them in order to retain their financial status.